please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Have started closing bell a bit early because the market has turned quite volatile. In fact, as we speak, the Nifty is in the red. The mid-cap index is deep in the red. That was always going to be the first one to make a low because of the way trends have panned out. And of course, the Bank Nifty is only about 16 point in the green. So sharp reversal is what you are seeing right now. The big question is this just intraday reversal or is this a bit of a reversal of a trend? We'll find out, of course, over the next few days. But for now, crucial last hour coming up. Hi, Surabhi. Good afternoon.
Good afternoon, Anuj. I have to hand it out to you completely because the developments of the last 10 minutes aside, and you could argue that, okay, that's a fresh negative trigger. It's not certainly not going as per the clear morning picture that we had. But I mean, you know, aside of that, in the morning itself, you said that even if this is a BJP victory, this could be an intraday sell, at least today in the market. And that's how it's playing out. So your thoughts on the Nifty and obviously the mid-cap situation that's on the screen?
You know, once again, the reason why we give so much importance to historical and anecdotal data in market is the historical and anecdotal evidence is because of the greed and fear factor of human beings, and that does not change, Surabhi. So what you've seen today, and I'm again repeating, this does not mean there's a trend reversal overall. This does mean that the last bout of rally that you had seen today was a culmination of that. And look, the reversal started right at 10 o'clock. By then, you know, we had no clue that this is how it's going to be 104, 105. Whatever it's worth, I think the markets got its desired outcome, perhaps less than desired outcome. But that was good enough for smart money to take some money off. And on the mid caps, the warning signs were clear. They were always there that there's been some problem with mid caps. This year is going to be a large cap year, and rallies in mid caps perhaps will be an exit opportunity because we had a 44-45% rally last year. Some bit of reversal to me will always happen. But I think for today, last hour could be interesting. It looks like, you know, in the morning it was looking like trend day on the way up. It's now turned on its head now, and you know, a bit of a trend day on the way down.
Oh, absolutely. And bears suddenly have you know, fresh ammunition at hand. Let's see, you've got a very interesting 60 minutes of trade lined up ahead.
You know, and just one more point. And if you take a look at the stocks making 52-week lows once again, you know, it's the same group of stocks. You know, Ajanta Pharma, the Canfin Homes, the IDFC, Capital First. Rupees also slipped quite a bit. So some of these indicators are looking quite interesting. Let's also bring Ashwani Gujral on board. And of course, we have Mitesh Thakkar also joining us. Ashwani, discussing this at noon time, you had advised taking shots as well. But what now? Last hour, you reckon it could be quite interesting on the way down, or would you cover your shots now?
Well, in the morning, prognosis was if BJP wins Karnataka, it's good for 2019. Now the opposite, you know, prognosis works. And the issue is fairly technical because the people who got in the morning, chances are, you know, are trapped. And now in the last hour, they are going to get taken to the cleaners because the more they get out, the more market falls and more the people who are in, they need to get out. As far as the daily sort of idea is concerned, today is a massive bear bar. There is no mistake about it, and being made after 8 or 9 bullish bars. If nothing else, you are getting into a consolidation, maybe 200-300 points on the Nifty, maybe 26,000, you know, 25,950 on the Bank Nifty. So I would think even now is a good time for the last hour and for the next few days, because you know, when things coincide in this manner, an event, an important high, you know, plus several days of relentless upside, you know, then that leads to a bit of a move on the other side. But correction, but it's going to look fairly painful because the rally was too huge, the previous rally. Having said that, individual stocks, Reliance Capital is a sell with a stop of 385, target of 370. Capital First is a sell with a stop of 362, target of 540. And Power Grid is a buy with a stop of 209, target of 221. In the mid caps, last year they rallied because of cost of capital. This year they are falling because of cost of capital. It's not, you know, some individual stock, it's a secular decline on mid caps.
I completely take your point, Ashwani. I mean, the manner in which some stocks are collapsing now. Maybe we can pull up some of the intraday graphs just as a case in point. And NCC, IRB, obviously BEML anyway had been a Karnataka play for a while. That stock is now really suffering heavy losses, almost down into negative territory. We are looking at a lot of pain on things like Ujjivan, Bata. It's across the board, as Ashwani mentioned, Equitas, all kinds of mid-cap stocks coming under pressure. Let's also bring in Mitesh into the conversation then. Good afternoon, Mitesh. Now, I know that a lot of people were trying to hold on to hope in the morning. What have you done with, first of all, the index positions? I mean, I'm guessing the stops would have been triggered.
So, Surabhi, we were revising the stop losses throughout the day, and around 10,885 is where we got stopped out.
Trying to hold on to hope in the morning. What have you done with, first of all, the index positions? I mean, I'm guessing the stops would have been triggered.
So, Surabhi, we were revising the stop losses throughout the day, and around 10,885 is where we got stopped out. About 45 points off from the highs, but at least still 100 points better than here. But that's okay. I think, these kind of things keep on happening. My bigger worry would start happening in case we start breaking the 10,750 mark. I think that should possibly then call for more correction, another 120 points kind of profit booking can happen. But as long as we don't break below 10,600, I would not be really worried. I think, this could just be a case of market, as Ashwani was highlighting, a market which has been overextended for last few days, overbought, and then goes through a stronger bout of profit booking. Having said that, this only increases volatility in the markets. For the time being, I have one buy and one sell call. The buy is on Colgate Palmolive with a stop at 1128 for targets of 1185, and Cadila Healthcare is a sell. Keep a stop at 390. Look for declines of 366.
Okay, fair enough. Just look at the screen now. 265 points gone on the mid caps. That always was going to be a problem, and not really the large cap. Large caps are still fine. But Ashwani, just a point here. Ultimately large caps will also have to follow, right? If there's this kind of decline in mid caps, or the large caps are still fine, and this is still a buy on dips market from the larger context.
See, the point is that a narrow market is heading towards a top, and that top is coming because you are so close to the previous 11,000, 11,100 zone. So even large caps will run their course, and then the entire market will correct because you don't have any mid-cap support here. So, the idea is that Reliance, Kotak, HDFC, these, 5 stocks can't keep on taking the market higher. And, a lot of consumption stories, the stocks which have led the market, they are getting into accidents. IT, for all the weakness in rupee, good news, etc., that's not being able to take leadership. So there's a bit of crisis of leadership also beyond 10,900. So that way, it looks likely that the entire market gets through a bit of a downside.
Okay, all right. Let's bring in a fundamental viewpoint into this conversation as well. Manish Sonthalia, who handles portfolio management services at Motilal Oswal Asset Management, is now with us. Manish, good to have you on the show. It's an important afternoon. I remember our last discussion, and I mean, you have been keeping your faith on mid-caps, and you've been, in fact, saying that in this decline, you've been looking out for good ideas as well. First things first, is there some sort of a leverage play that's leading to accentuated declines? When, for instance, look at a stock like NCC, it suddenly collapsed 10%. So these 10-15% kind of cuts that we've seen in the last few weeks, what do you make of this?
So it has got to do with valuations, nothing else. If you look at the numbers, by and large have been coming through, but in a rising interest rate scenario, it plays on valuations immensely. And if you're, let's say, the company is reporting a 15% earnings growth, you can't have that company trading at a 50 prices to earning multiples. And this becomes accentuated when you see a CPI number just last evening on a higher print than that was expected. So I think it has got to do with interest rates, it's got to do with inflation, it's got to do only with valuations. By and large, I think it's been a fair quarter as far as the earnings season is concerned, both on the large caps as well as the mid cap side.
Okay, Manish, hi, good afternoon. So, the one point which a lot of people are making is that last year was a cost of capital rally in the mid caps, and this year that's turning on its head. You think from mutual fund investors' point of view, this year is to get into large cap, perhaps Nifty ETFs or large cap funds?
No, I mean, just look at it this way. The previous time we crossed 11,200 or just about approached 11,200 on the Nifty. And from that point, you have seen the mid caps and the small caps correct by anywhere between 20 and 50%. Now we are approaching again those levels of 11,200 on the Nifty. But the mid caps have really not risen that much. So I think a valuation correction is ongoing for the last couple of months. In fact, the incremental money that has been coming in funds and PMSs, etc., is all flowing towards large cap funds. So you are going to create the same excesses in large cap, stocks that was done when the markets were rallying one way from, let's say, 10,000 to 11,200. It was the mid caps which were participating all along. Now this time around, the incremental money is again chasing the large caps. So it's never an easy game to make money in stocks. And if you chase momentum on either large caps or mid caps, there will come a point in time when your strategy is not going to work. So I think at the end of the day, it has got to be the price that you are paying for the growth that you are getting.
Okay, so just to take that point forward, I mean, I'm simply looking at price performance and seeing where all the cuts have been. For instance, a stock like Jet Airways is down about 30% in 1 month. I mean, we've seen plenty of pain in a couple of cases where earnings have not been up to expectations. So when you're hunting around for mid-cap bargains now in this environment, what specifically is exciting you?
Well, some of the sectors which have actually delivered on numbers are the consumer staples names across the board. I mean, even if you are having, let's say, slightly higher valuations, they seem to stick in terms of pricing, or let's say the IT names, they seem to stick. But I think, the pharma companies are yet to report the numbers. If they report some decent numbers, I don't think that the prices are going to correct very significantly, that the correction has already happened in most of these names. Or let's say the GST plays, is there a shift from unorganized to organized? I mean, these are some of the spaces where you'll find comfort. But, of course, if the numbers are not there and the valuations are high, then obviously there is no respite. I mean, it's going to fall like a vertical knife.
Okay, but the other point which is being discussed is, is this year going to be a year in which we are going to see more money move out of banks and NBFCs, Manish? We've already seen from the top that weight is down of financials in the index, but do you think it needs more correction?
I mean, if you see the incremental data coming out of the financial space, the incremental market share for private sector banks and NBFCs is more than 100%, which means, the deleveraging that is happening with the PSU banks, all of that growth is going to the private sector banks and NBFCs. So, even if they're expensive, the bigger private sector banks, which has decent NPLs, or, they don't have NPLs out of control, they would just tend to price in future growth, and you'll just keep on discounting future profits currently. And maybe you were discounting 2 years of growth, now maybe you'll be discounting 3-4 years of growth, because the problems of the PSU banks are not going to go away in a hurry. So from that point of view, I think this private sector banks and NBFC space is going to remain in limelight in a positive way. But at the same time, the cost of funds is actually going to increase for NBFCs, and that's going to weigh against the valuations at which many of the NBFCs are actually trading. So it's slightly, adverse for NBFCs, but very positive for private sector banks, which have decent CASA ratios and a decent, lending book that they have.
By the way, the bears are having a field day on Tata Motors, like they have been having on this stock for the past 1 year. Why just talk about one afternoon? It's down 4.5% as we're speaking at the lows of the day. Manish, I was, just chatting with Nimesh, and we were talking about, some of the positions that you've held in the past. So you've liked mid-cap pharma a lot. And correct me if I'm wrong, you've pared down your stake on some of the oil marketing companies. I think HPCL was a much larger holding for you. Now that's been pared down. So on OMC's first up, with this $78 price of oil, what would your current positioning be?
No, so if you would have followed the news, they have raised the prices on petrol and diesel just a couple of days back, and they had not been raising prices over the last 15 days. So there was an apprehension whether actually deregulation is working or not working. Now, with the increase in oil price, the prices of diesel and petrol, there's at least a comfort and belief that, of course, if the crude oil prices are heading up, or if the rupee is depreciating and they need to take, let's say, 2 rupees of hike to reach normalized margins that they were having 15 days ago, then actually that mechanism is working. And so from that point of view, the valuations on all of these OMCs are actually very, very good. There was excesses when you had the prices of, let's say, an HPCL closer to 550 or thereabouts. But at these prices, single-digit prices to earning multiples, and if these companies earn normalized margins with a 5 to 6% volume growth, I don't see how the prices can correct significantly from these levels. So I definitely find hardcore value in the oil marketing companies at these prices. And from that point of view, at least a 4 to 5% allocation is good. I mean, I don't see how you can lose money buying them at these prices.
Okay, by the way, just pull out the currency intraday chart as well, the dollar rupee pair, and that one has really been the epitome of volatility today. Of course, BEML stock perhaps takes the cake, but that's dollar rupee. Now, it opened at 67.70 thereabout. After that, when you had the results, the first half of the results moved all the way down to 67.45 thereabout. Now, forget about 67.50, which is where the first real big hurdle came in. It's now a one-way move towards 68 on the dollar rupee. And that is quite interesting. That, in fact, is remarkable the way that is moving at this point in time, 67.88 to be precise. Manish, some more thoughts then. Let's talk about a couple of sectors where, stocks are making 52-week lows on a daily basis. One is pharma and one is cement. Your thoughts on both these spaces?
So pharmaceuticals, I definitely find very deep value at these prices. It's somewhere near the bottom. You exactly don't know whether it's 5% or 10% from these levels. But the whole point is, this sector is going to be in a sweet spot like we saw in the case of an IT, which was, let's say, 6 months back. So from that point of view, definitely there's deep value in pharmaceutical names. Maybe a guy who has a 2 to 3 year time horizon, I mean, it's a very good investment at these prices. As far as cement is concerned, we got to see how volumes shape up and how prices are going to hold, because I think exactly the problems of sand mining and etc. have really not gone away. So post the third quarter numbers, I don't think the prices are actually holding up. So, and costs are actually going up. So you have petcoke prices and logistics costs, etc. Diesel prices actually going up. That's weighing on margins. But at the same time, valuations have corrected significantly. So near term, it may just be around at these levels, but slightly medium to long term, definitely a positive outlook on cement as well.
Okay, so just a quick follow-up before we let you go today, Manish, on pharma, since you're saying that there is very good value from a 2 to 3 year perspective, what kind of pharma companies would you look at now? Because across the board prices are pretty low. Would you look at the large generic plays on the US market? Would you look at specific CRAMS, API? How do you play pharma?
So I think there's value in across. You can look at pure domestic formulation companies. You can look at generic companies having specialty pipelines, and you can also look at CRAMS. All of them have deep value, and depends on what valuation you are paying for what growth. I think there's value across the table.
Okay, Manish, we let you go on that note. Thanks a lot for joining us today. Still in the flat territory for the Sensex and the Nifty. The Bank Nifty has also recovered a bit from the lowest point. So for now, some stability at lower level, 1:2 on advanced decline. Sudeep Bandyopadhyay is also with us. Sudeep, hi, good afternoon. Let's discuss some stocks first. Tata Motors. I know a lot of people say there's a lot of value in the stock, but the market's giving some message, right?
Absolutely right, Anuj. I think, we also used to believe till about 6 months back, there is quite a lot of value in Tata Motors. But what's happening, Anuj, is the global markets, 95% plus profits and, was coming from the global markets, JLR predominantly. And that's the, the segment where there are signs of trouble. Look, China is doing well. Their manufacturing in China is okay. There are numbers from US, UK and Europe as a whole. Yes, month on month the numbers were looking good because, if you're comparing with last year's base, it was kind of very low. But very clearly the trend is not very, very encouraging as far as JLR is concerned.
Okay.
Jaguar has been suffering for some time. Land Rover was doing all right, but even that's kind of slowing down.
Okay.
Also, if you remember in the context of the global market where they are fighting, I think the German car manufacturers are spending billions and billions of dollars. In that context, I think Tata Motors is going to lose out, and that's the worry.
So, well, that's the cliffhanger, Karnat. At the end of the day, you'll have to say that the pool of polls still got it right, Surabhi, for whatever it's worth. It's still turning out to be a bit of a cliffhanger. That's Lupin's numbers, net loss of 700 crore, but that includes a one-time loss of about 1,400 crores. So, let's see. The stock has already been, of course, making fresh 52-week lows. The expectation was about 340 crore profit. You take out that 1,400 crore loss, and perhaps we're talking about 700 crore adjusted profit. I think that's what the market is reacting to. The one-time loss is on Gavis Group acquisition. I think we'll have Ekta also joining us soon, but the stock has actually moved into the green. Again, the market positioning here, it's been a stock which has been making fresh lows, and now you have still in the red, but has recovered quite a bit from the low point. In fact, now moving in the green, Surabhi.
Absolutely. In fact, the revenue number at 4033, that seems to be actually slightly better than estimates. We were looking at 3928. It's the US geography, which everybody is talking about. I don't have that number immediately in front of me, but if that number is northwards of about 200 odd million to 14 million in terms of what they've done in US sales, and the market will take that with both hands. As of now, the top line number seems okay. EBITDA is slightly shy, and profit has an extraordinary. So the stock is taking its own time to react to it.
The loss is an extraordinary. So technically,
the loss number is extraordinary.
Technically, it's a profit, and I think the market's like that. We have it's the stock reacting now. 765 is what we have on Lupin. That's Lupin. Of course, we'll do more analysis of it going forward. But for now, Andrew Holland is also with us. Andrew, good afternoon. So quite a bit of volatility today. Your thoughts on what's panned out today?
So I think what stands out is that the market quickly reacted positively, which has been the case for the last few days anyway before the election results. But once we have it, then we turn back to the fundamentals, and the macro is looking a lot more uglier than it was, even 4 or 5 days back. So I think since the kind of RBI monetary policy, where they gave that Goldilocks scenario, I mean, things have really turned down. The oil price is near to 80. The rupee looks as though it's heading to 70. All of these things can't be good for the economy. And I think once we think about that, and if global markets also have a kind of a retreat from their highs, then we could be in for a bit of a downswing, or more volatility at least.
Okay, by the way, Andrew, I'll request you to just hold on for 2 minutes. We'll just address those Lupin numbers and come back to you. Ekta is with us now. Actually, that EBITDA number is not looking good, and that rally is also getting sold into. Ekta, your thoughts?
Well, yes, absolutely, Anuj. I think it's quite a disappointment in terms of the margins for Lupin. So if you just ignore the net loss, and it's quite perplexing in terms of what kind of write-down they've taken for the Gavis acquisition that they made a couple of years ago, and why exactly they have written down those assets. They do have a call taking place at 3 p.m., but the street was working with margins of around 18% this quarter. So this 17.3% that they've reported is definitely a bit of a disappointment. And the revenue is also not much above what the street was estimating. 4,033 crores is what it's coming at, and we were working with around 3,928 odd crores. My sense is that maybe it is also a valuation play which is coming on board now, simply because of the kind of correction that we've seen. But we need more commentary from the management before we can assess what else happened in the quarter for Lupin.
Okay, Ekta, thanks a lot for that. Back in the red for Lupin now, and that rallies have been sold into. Andrew, your thoughts on pharma as a space?
Absolutely. In fact, the revenue number at 4033, that seems to be actually slightly better than estimates. We were looking at 3928. It's the US geography, which everybody is talking about. I don't have that number immediately in front of me, but if that number is northwards of about 200 odd million to 14 million in terms of what they've done in US sales, and the market will take that with both hands. As of now, the top line number seems okay. EBITDA is slightly shy and profit has an extraordinary. So the stock is taking its own time to react to it.
The loss is an extraordinary. So technically,
the loss number is extraordinary.
Technically, it's a profit.
Yeah.
And I think the market's like that. We have, it's the stock reacting now. 765 is what we have on Lupin. That's Lupin. Of course, we'll do more analysis of it going forward. But for now, Andrew Holland is also with us. Andrew, good afternoon. So quite a bit of volatility today. Your thoughts on what's panned out today?
So I think what stands out is that the market quickly reacted positively, which has been the case for the last few days anyway before the election results. But once we have it, then we turn back to the fundamentals, and the macro is looking a lot more uglier than it was, even 4 or 5 days back. So I think since the kind of RBI monetary policy, where they gave that Goldilocks scenario, I mean, things have really turned down. The oil price is near to 80. The rupee looks as though it's heading to 70. All of these things can't be good for the economy. And I think once we think about that, and if global markets also have a kind of a retreat from their highs, then we could be in for a bit of a downswing, or more volatility at least.
Okay, by the way, Andrew, I'll request you to just hold on for 2 minutes. We'll just address those Lupin numbers and come back to you. Ekta is with us now. Actually, that EBITDA number is not looking good, and that rally is also getting sold into. Ekta, your thoughts?
Well, yes, absolutely, Anuj. I think it's quite a disappointment in terms of the margins for Lupin. So if you just ignore the net loss, and it's quite perplexing in terms of what kind of write-down they've taken for the Gavis acquisition that they made a couple of years ago, and why exactly they have written down those assets. They do have a call taking place at 3 p.m., but the street was working with margins of around 18% this quarter. So this 17.3% that they've reported is definitely a bit of a disappointment. And the revenue is also not much above what the street was estimating. 4,033 crores is what it's coming at, and we were working with around 3,928 odd crores. My sense is that maybe it is also a valuation play which is coming on board now, simply because of the kind of correction that we've seen. But we need more commentary from the management before we can assess what else happened in the quarter for Lupin.
Okay, Ekta, thanks a lot for that. Back in the red for Lupin now, and that rallies have been sold into. Andrew, your thoughts on pharma as a space? I know we were called you to discuss bigger things here, but since we had Lupin's numbers, this is a sector which is now giving 52-week lows, and valuation-wise, perhaps trading at historic lows, or at least in the recent history. You would want to take a punt here, or you think it's best avoided?
No, I think just avoid it. I think that whole kind of generic story is something of the past, and most of these companies will have to kind of reinvent themselves. So I don't think until they start doing that, then we need to look at them. And also, we're still awaiting Trump policies on the whole sector, which, I know he didn't give very much away the other day, but I'm sure he's coming back to give us more. And I don't think it's good news for pharma. I just don't need to be in this sector.
Okay, by the way, on Lupin, along with this big impairment that they've taken on Gavis, there is also an additional deferred tax. Again, it arises on Gavis. So there's about a 1,400 crores of a hit on the impairment that they've taken, plus deferred tax to the tune of almost 300 crores. That put together has obviously led to that big hole in the bottom line. But if you strip that aside, look at the margin performance at about 17.3%. That's not looking very good, as Ekta pointed out. Andrew, just very quickly, thought overall on the market. Now, this Karnataka event pretty much behind it, even if we sort of go with the current setup, which is a non-BJP government. What next for the market, and specifically the mid-cap part of it, which has seen some pretty savage unwinding of late?
Yeah, so I think, as I said, I think the macro is looking a bit, ugly at the moment, and I think we need to get through that. Already, I'm seeing consensus forecasts for earnings coming down from the 25% to around 19-20. So that doesn't bode well given where valuations are. So, I think in the short term, if markets do see more volatility, that will probably play out more in the mid caps. And so I think, I think it's probably going to be one of those years where, large caps probably do better than mid caps and small caps.
Well, yes, that's been the trend for some time now, Andrew. Thanks a lot for joining us today with your thoughts. By the way, the Lupin stock is now actually at the intraday low. Just pull out the chart intraday, which is interesting. And this is what's wrong with the pharma companies. That entire rally has been sold into. Now back to the level where it was trading when the results came.